All right, let's dive into Exponential Fitness's Q3 2024 earnings call. We've got the transcript, we've got some stock snapshots. Let's see what we can find.
This one is interesting. This is a company with a new CEO. Seems like he wants to make some big changes.
Mark King, the Taco Bell guy. I'm kind of curious to see how that background's going to work in fitness.
Well, right off the bat, he wants to move Exponential away from a sales-first model and more towards a franchise-first approach. And he's serious about this, really focusing on franchise profitability and support.
So basically, if the franchisees are doing well, everyone's doing well.
Yeah, basically. The idea is if they support the franchisees, they'll open more studios, more members, everyone wins.
Makes sense. But scaling a business like this has got to have some challenges, right?
Right.
Especially in a competitive industry like fitness.
Oh, for sure. And he was very upfront about the growing pains they've had, saying that their infrastructure and processes need to catch up.
And also the regulatory issues.
Right. He talked about how those regulatory challenges, plus some turnover on the franchise sales team, have hurt their license sales.
So, some speed bumps for sure. But he also sees international expansion as a big opportunity, right? Japan especially.
Yeah, I thought that was interesting. I mean, this is the guy who took Taco Bell global, so when he says Japan is doing well and that they could have as many studios outside the U.S. as inside, well, you got to pay attention.
Ambitious for sure.
Yeah.
I bet investors want to know how he plans to do that. But let's get into the actual numbers for this quarter.
All right, sounds good. So revenue was pretty much flat year over year, but their adjusted EBITDA was up 17% to $31 million.
Flat revenue isn't great, but that EBITDA increase is good.
Exactly. And remember, he's all about building a sustainable business. So even if revenue growth is slow, profitability is improving.
Didn't North American system-wide sales do pretty well?
Yeah, up 21% year over year. Both new studios and same-store sales were up.
So there's demand, at least in North America. What about individual brand performance? Anything specific in the call?
Not super detailed, but he did say that some brands that are underperforming might get cut if they don't improve.
Didn't name names, though.
Nope.
What about Club Pilates and Stretch Lab? Those seem to be doing great.
They are. They're responsible for 2/3 of new studio openings.
Okay, so new CEO.
Yeah.
Big vision. Mixed bag of financial results. Let's take a quick break, then come back and dig into those numbers even more.
Time to really get into these Q3 financials.
Let's do it.
So revenue was flat year over year, which doesn't sound great, but you got to look at the context.
Right, focusing on long-term sustainable growth.
Yeah.
Not just chasing revenue.
Exactly. And adjusted EBITDA was up 17% to $31 million.
So they're making more money with the revenue they're generating. Let's break that revenue down more. Where did it come from this quarter?
Well, 72% of their revenue was recurring, royalties, franchise fees, memberships, that kind of thing.
Recurring revenue.
Reliable.
Exactly. Gives them stability. Investors love that.
So with their focus on franchisees, I'm guessing franchise revenue is a big part of that?
Absolutely. Up 22% year over year. Nice. Shows that existing franchisees are doing well and that they're attracting new ones.
That's good. But what about moving away from company-owned studios? Did that affect revenue?
It did. Other service revenue was down, which includes those company-owned studios, but that was a strategic decision, moving away from that model to focus on the franchisees.
So a short-term hit to revenue. For long-term gain, they're also streamlining their merchandise business, lowering inventory.
Right. That might mean lower merchandise revenue for now, but it'll be better in the long run.
So really focusing on that core business.
Yeah, it's not just about chasing short-term numbers.
Okay, let's talk expenses now.
Sure. SG&A expenses were up year over year, partly because of those litigation expenses.
Yeah, those legal fees can add up. But I thought they said run rate SG&A was actually lower than last year.
It is. Moving away from company-owned studios is helping with that.
So another one of those short-term pain for long-term gain moves.
Exactly. They're also expecting higher SG&A in Q4.
Yeah.
Because of their franchise convention. So an investment in those relationships.
Yes, very important.
What about capital expenditures?
They expect it to be about 3% of revenue, mostly tech upgrades.
Investing in data.
Which could lead to more efficiencies down the line.
Makes sense. How about their overall financial health?
Cash position improved, partially due to taking on some debt.
So they've got some cash, but they're also using debt strategically.
Right. Like with any financial decision, you got to look at the whole picture.
We've really learned a lot about Exponential's financials.
Definitely. But there's more to uncover. We'll talk about potential risks and opportunities next, because things can change quickly.
All right, we've looked at the numbers. We've looked at the strategy. Now, the big question, what's next for Exponential Fitness?
Yeah, trying to predict the future is always tough. but we can look at the trends and see where things might go.
Okay, so can they keep growing like this? Especially when so much depends on just a few brands.
That's a big risk for sure. What happens if those brands lose popularity?
Yeah, what if tastes change? Or competition gets tougher?
Exactly. And that's where Mark King comes in. Can he turn around those underperforming brands? Can he find new brands to acquire to balance things out?
And don't forget international expansion, especially Japan.
Right. But growing in a new country with a different culture, that's not easy.
Lots of potential challenges. But let's talk about the good stuff. What are some of the opportunities for them?
Well, they are in a good market. Boutique fitness is still growing. People care about health and wellness.
And they're willing to spend money on it.
Exactly. And Exponential is in a good spot. They've got lots of different brands, a strong franchise model, and they're growing internationally.
Plus, their focus on data.
Oh, yeah. That's huge. Using data to make better decisions, that's how you stay ahead.
What about partnerships? Could they team up with other companies?
Definitely. Like fitness apparel brands or nutrition companies, even tech platforms.
Creating a whole wellness ecosystem.
Exactly. Everyone wins.
So Exponential could become more than just studios.
Right. They could be a whole wellness platform.
That's a big idea. But can they actually do it?
It'll be fun to watch and find out.
We'll be here to analyze it all.
As always. But remember, this is just our take on things. Do your own research. Talk to a financial advisor before making any decisions.
Okay, now for the fun part. Our "This is not financial advice" segment.
Let's do it.
King keeps talking about Japan.
Mm-hmm.
What if, and I know this is crazy, what if they partnered with a Japanese gaming company?
Oh, interesting.
A fitness video game.
Japan loves video games, and they love technology.
Imagine virtual workouts.
Yeah.
Celebrity trainers as characters.
You could even connect your wearable tech
Earn rewards in the game.
and get discounts at real studios.
So this is not financial advice, trade idea.
Yeah.
Buy XBOF calls. Betting on that Japan expansion.
Pure speculation, of course.
Just having some fun.
But hey,
You never know.
that's what makes the market exciting. Anything is possible.
All right, that's our deep dive on Exponential Fitness. We hope you enjoyed it.
Keep learning, keep exploring, and we'll see you next time.